Hey guys, another day, another almost 600 points down on the Dow, NASDAQ crashing, S&P 500 moving significantly lower. Guys, this is not the crash yet. This is just the very tip of the iceberg, what you're about to see. As clear as it is apparent to me that this is just the early stage of the crash. Look, it may not be appear to a lot of people that are still thinking and in the mentality of, oh, let's buy this dip. People have been so conditioned into buying the dips over the last 10 years, they just can't see the market doing anything else. And so unfortunately, a lot of people that are using the strategy right now of buying the dip, they are getting crashed by the market crash. And so for those of you that bought the dip today, oh boy, I sure wish you were a subscriber of our channel. Not only of our channel, but subscriber of our VIP alerts. Because, hey, I had some VIP guys that made 100K plus today. And I sure wish that if you've been following this channel for some time, that you do take the chart course. Because this is the time in the markets that you have insane opportunities to make a ton of money. And I sure hope that every single one of you that is a trader out there that's trying to find ways how to make the money when markets crash, that you will take advantage of what we've developed that helped so many traders take their accounts from 25K recently to 300-400K. Traders that started with $600 that now got accounts of over 20K plus, 25K plus. So if you are out there and you're trading on your own and you're not sure, like, hey, I may be making a little bit of money, but I sure would like to go to the next level. If you are that person, then click the links below this video. Take advantage of this. But in this video, here's what's going on, okay? People are scared. The people that are holding big short positions, this is what they're thinking right now. Oh my God, what if the market's going to bounce tomorrow? So I'm going to take you through a couple of charts and show you the simple explanation. Actually, if you were a subscriber today, this is what me and you would have been talking. One of our senior traders would have gotten you on the phone today. And this is exactly what would have been shown you this morning. Now, as you know, this morning, it wasn't quite evident that the markets were going to crash because yesterday they had such a substantial run from the lows of the day when they were low at the lowest point, maybe minus 500 points, and then they've erased pretty much all the losses. It even looked like the markets were going to go higher. So when they opened today, they were quite positive, and there was a fear among even some of our traders that the markets were going to go way higher. But as you know, we ended up severely lower for the day. For those of you that were not sure this morning, oh, is the market going to go higher? Is the market going to go lower? You're probably facing the same decision. You're probably, thinking right now, oh, what's going to happen if the market is going to bounce tomorrow? So this is what we were observing. This is a very simple observation in just a few charts. So here's the chart of Netflix. And you're going to be thinking, well, what does Netflix have to do with the crash? Actually, Netflix got nothing to do with the crash. But the illustration on the chart of Netflix, I think, is a really good one. And it illustrates the point I'm trying to make very clearly. Observe this right here on the chart of Netflix, which was on July 16th, 17th. Actually, it was on the 17th of July, 2018. Do you see this gap that was created that day? Actually, this was right the next day after we posted the video on our channel saying that Netflix was going to drop $50, and it did, and it bounced, okay? And just like the markets yesterday, it erased most of the losses. So I want you to pay attention very close to the formation of this candle. Do you see that the candle is sort of empty inside? It's like white, and then it's got these red borders around it, okay? And notice this little tail sticking out right here. So remember this candle, because I need to take a mental image of this right now because it's going to be very relevant in just a second. Second thing I want you to focus on is the second candle right here. This candle right here is fully red in color, and it's got little tails sticking out on both sides right here, okay? Remember, the gap lower. In other words, Netflix share price opened significantly lower the next day after trading right here in the 400 range, okay? Next observation from the Netflix chart. Notice what happens after that. 1, 2, 3, 4, 5, 6, 7, 8, 9 days consecutively downward spiral for Netflix. This also has an importance. Then it bounces for a few days in a row, and guess what happens next? It falls more. After that, Netflix shares try to go back to that level 1, 2, 3, 4, 5 times, and guess what happens? They never get to close this gap right here that was created right here, guys. Very, very crucial and important that you understand this. Now, I want you to keep this image in mind. And the last observation we're going to make is when this gap was created, Netflix was actually, just pretend like you can't see this part of the chart. So Netflix was a really nice uptrend. Nobody knew that it was going to drop here and then it was going to drop all the way here and so on. Well, maybe we knew that it was going to drop, but a lot of people didn't see that coming. So because they weren't paying attention to some of the divergences that were developing here. So what happened basically is Netflix was in a really, really nice uptrend, and that's why nobody expected this huge gap lower. Keep that observation in mind as well. I promised I was going to do a review real quick. Last week, 7 days ago, we posted a video of shorting Netflix when it was trading pre-market at 386. We pointed out specifically in that video, which you can review that video, why we were taking the trade if you're curious to find out, that made us believe Netflix initially was going to drop within 24 hours to 350, then it was going to drop to 330, and then ultimately was going to drop to 290. We're not quite at 290 target yet, but we're getting pretty close there. The most important observation is when we took advantage of the trade, when the shares were at $386 pre-market. And you can't see 386 here because they, pre-market action is not reflected on this chart. But so what we said specifically, there was going to be a black candle formed. See, at the time we were recording the video, there was none of these candles right here. And we specifically said there was a black candle. So guys, if you're trying to figure out what the black candle represents, how did we figure it out? That black candle was going to be created in the chart before it actually was created on this chart. Take the chart course. Simply click the links below. Take advantage. If you're a trader, I promise you this information is going to be very, very helpful to you, and you will be able to learn something to become a better trader. Now, back to the market crash observations and why we believe it's going to continue. So again, notice this. The gap down was created in Netflix when it was a nice uptrend. Notice the way this candle was created. Nice empty candle with red borders. Fully filled candle right here, all red. Notice what happens after that. Okay, keep that in mind. I'm going to show you S&P 500 on October 23rd. Do you see this gap right here, guys? Do you see this gap? Yeah, it's not going to be as pronounced as in the chart on the Netflix. I mean, this is S&P 500, right? So here it is. It opens much lower. It gaps down yesterday on October 23rd. Look at the candle formation. Do you see it's very similar to the candle that I was just showing you on Netflix? Do you see, the formation of the candle? It's got a tail sticking right here, another tail right here. Candle's empty inside. It's got red borders around it. Okay, just to make sure that you're following, I'm going to take you back real quick right here. So pay attention to this candle. Pay attention to this gap on S&P 500. Okay, go back right here. Do you see this candle? Yeah, the candle is bigger, right? So it's not the size of the candle that matters sometimes. It's the formation of the candle, right? So clearly, we have very, very similar candle in the formation, not the size, but the formation. Okay. All right. So that was yesterday, October 23rd. So gap down, however, notice where the gap down. In the case of Netflix, we pointed out that the gap down was created when it was trading in a really nice uptrend, like right here. So the gap down was created when it was still in a very nice uptrend. This gap down right here on S&P 500 was created under 200-day moving average. Guys, this is bearish as hell. Okay, when you see a gap down created after a stock or an index or a commodity or a currency breaks under this 200-day moving average, it spells trouble. Okay, basically expect further downfall. So what we were saying in yesterday's video, okay, one of the videos I posted yesterday, basically we said, look, if today on October 24th the market was going to close this gap on the way higher, then we told you to lighten up on your short positions. Now, if the gap was not going to be closed, then we're definitely heading significantly lower. And by the way, in one of those videos recently, we posted our projection for S&P 500 at 2323. Yes, way lower from 2740 when we were posting that video. Actually, we posted that projection when we're still. Actually, we posted that video when we were at 2800 on S&P. So if you're curious to learn more about what was said there, you can go back, some of these recent videos that were posted the last couple of weeks and check them out. Get more information. Okay, moving further. Today, October 24th, building the case, okay? What happens? S&P 500 fails to close the gap. Do you see this right here? This right here. It actually tried to go a little bit higher in the morning. It failed completely to even make a remote effort to close this gap. And so when the stocks started selling off, we kept sending messages, hey, you guys got to short this market. You got to add put positions, puts, buy every bounce. We clearly disclosed the simple strategy, a few days ago, over the weekend, I think, where we said, look, going into this earnings season, if you see anything pop, you got to short it. You got to buy puts on it. And that strategy has been working really good. The most important thing is, though, guys, to stick to your positions, right? Because if you jumped out this morning, then you're sitting right now and you're wondering, oh my God, I could have made 100 grand, but I didn't because I jumped out of my positions earlier. So if you're curious how to trade and capture some of these great trades that our alert subscribers get to participate in, it all starts with learning your charts and identifying divergences and so on. And so if you are not sure, even remotely, what I'm talking about, then you definitely need some more information so you can catch some of these great trades, so you can be a better trader. So check out some of the links below this video. Look at this candle. Look at the formation of this candle right here. Do you see the red candle? Remember I was showing you on Netflix, I said it's not the size of the candle that matters, it's the formation of the candle. You see the second candle right here on Netflix. It's red, it's fully filled in red color. Okay, so we got the same situation basically on S&P. The only difference in the chart of S&P, it's a lot more bearish than the Netflix chart was right here at this point, because this gap on S&P is actually being created all the way here under 200-day moving average. The reason it is such a bearish thing is because typically banks come in and they buy stocks at this 200-day moving average, using it as a support line. In this case, we're breaking below support. Not only we're doing that, but we're doing that on huge volume, which I'm going to show you in just a second. The most important thing right here in the Netflix charts is this. So we observed the same candle in S&P 500, same formation of the candle. We observed second day today, same formation of the candle is right here. Look what happens after that, right? So I put this 1, 2, 3. So the drop, 9-day consecutive drop. So this is what we're saying. For 2 weeks, the markets are going to be falling. Okay, this whole charts of Netflix and S&P 500 yesterday and today. Okay, we're basically saying from here, we're heading significantly lower. We're heading significantly lower. Look at the volume yesterday, right here on S&P 500. Look at the volume today. It's much higher. Like, look at that volume. The volume is huge. The candle is huge. The move is huge. The magnitude of your move is so huge. You actually have the volume bar, this candle, they're colliding. I mean, this is crazy. I mean, do you see this anywhere else on this chart? No, because it doesn't happen very often. You know why? Because a gap under 200-day moving average has not happened in the S&P 500 chart in forever. Okay, so this is a very rare type circumstances and that's why buying the dip approach is no longer working in this market. Yes, at some point it will be time to buy the dip, but this is not the time. The time right now is to short the hell out of this market, which we've been doing for quite some time now, reaping the benefits of our strategy. So to summarize this, October 24th, S&P 500, the main observation of the day is this. S&P 500 failed to close the gap, and so did NASDAQ, and so did Dow Jones. They all failed to close the gap, which is an extremely bearish sign. They made the similar candle formations as we observed in the chart of Netflix. If we apply the Netflix history to the situation in the markets, observing the charts, this tells us that the markets is going to continue falling for the next 9 trading days, which is literally 2 weeks. In 2 weeks, the markets can fall substantially lower, as we pointed out last week, to a level of 2,323 on S&P. So tomorrow we're observing a very critical level, which is a level of 2590. If we break below that level, we're not very far from February lows of 2540. If we break below 2540, that 200 move lower on S&P 500 could come super fast. So get ready, put your seatbelts on. It's going to happen in the next 9 days. If you're not so convinced, if you are not yet convinced, let me show you one last piece of the puzzle. I told you I'm going to show you just a handful of charts. So we looked at the Netflix chart. We look at the S&P 500 chart. And here's the final chart, which solves the puzzle. VIX to skyrocket. Okay, this is a daily chart of the VIX. A lot of times in our videos we talk about a bearish formation that we call the death cross. In this case, this is a bullish crossover right here where the blue line is fixing to cross the orange line. We have not had this sort of development in the VIX in years. And so last time the VIX spiked on S&P 500 and immediately went down. This time it spiked higher. It attempted to go lower, but as pointed in yesterday's video, it's holding this 20 level really solidly. And at this point, making this observation, we think VIX is going to go way higher. Look at this. I mean, there's just a lot of bullish things. Yesterday I pointed out that if this black line wasn't going to cross this one, if it was going to go higher, that we're going to get closer to a bullish crossover here, which was going to propel VIX much higher. Now, if that doesn't convince you, VIX to the moon on the weekly chart. Here's why the weekly chart should look a little bit more convincing to you. The VIX chart should be looking a little bit more convincing because this crossover, as far as the weekly time frame, has already taken place. It did crossover today. And notice this candle, a lot of times when we were getting candles like this, we're getting sells off right away. This is a different type of situation, okay? We're seeing that VIX could potentially go all the way to 80. You're going to say, dude, you completely lost your mind. This chart does not even have 80 on it. We see a highest value right here of 50. I know, but in the next 9 days, you will see this chart will have a value of 80 when you're going to be looking at it. And this thing right here is going to go all the way to 80. Now 80 actually may be very conservative. We may go to 90, may go to 100. Okay, but all I can tell you this. Remember how everybody was saying Bitcoin was going to the moon in December of 2017? Well, here's the deal, guys. The VIX is going to the moon in the next 9 days. Guys, if you're trading stocks, if you're trading options, if you're not familiar how to make the money when stocks fall, look, this is a very valuable skill that will come handy. And even if you're not having the best month right now, you can turn this around. You can make this year your best trading year ever. And all you need to do is schedule a 20-minute free coaching trading session by clicking the link below this video. You will talk to a senior trader or to myself directly. We will answer any questions you have about trading stocks or options, about charts. You can ask any questions you want. Okay, it's free. The only concern is we get completely booked on some of these 20-minute sections, and with the markets crashing this week, just try to book your session as quick as possible. Okay, if you want to be a better trader, I promise you we'll share something that's going to help you. With that being said, guys, thanks for watching. I'll catch you in the next video. Make this year your best trading year ever.